Retail are no longer on the periphery.
Yeah.
We're now the biggest and potentially the most important players in the market.
When you have a disruption like the Iran conflict and there's massive sell-offs and massive rallies sort of day in, day out, people don't know what to do and they sit on their hands. And that's not an investor problem, that's an industry problem.
Retail now own 38% of the US stock market.
Yeah.
But let me put that in perspective. That's not 401ks, that's not ETFs, that's not in indices trackers. That is single stock direct ownership. It's actually hitting the radar of younger savvy investors. Why not start to take advantage and harness that potential? Literally the time is right now.
My guest today is Nirav Karia, co-founder and CEO of Curation. Curation's a platform that wants to transform how equity stories are told to retail investors. Tell us a little bit more about the platform, but also about your journey and how you've come to start it and run it.
Yeah, thank you. Curation's goal is ultimately to help retail investors make better informed investment decisions. That's been my mission from day one.
Yeah.
Now, we think that the responsibility largely lies with companies who are the ones that are looking for investors.
Yeah.
And actually, there is a structural change in capital markets. We have traditionally been speaking and pointing our attention towards institutions, but actually retail are no longer on the periphery.
Yeah.
We're now the biggest and potentially the most important players in the market. Curation's job is to help companies unlock the power of retail and actually help them attract, engage, and measure the impact of a retail investor strategy. And when you get these three things right, actually the beneficiaries are both the companies themselves and the retail investors.
It's interesting, right? You said retail's becoming mainstream. Just to pull a few stats out, in the US, something like 40% of stock trading volume, 60% of options volume. In the UK, that's 20%, give or take 5% on a given day. It's a big part of the mix now. And I guess in the conversations you're having with companies, like, how are they responding to that? Do they care? Do they care enough?
Well, look, some of the key stats I think are really important we set out at the beginning is Goldman Sachs survey at the end of 2025. Retail now own 38% of the US stock market.
Yeah.
But let me put that in perspective. That's not 401ks, that's not ETFs, that's not in indices trackers. That is single stock direct ownership. So retail own 40% of the US equity market, right?
Yeah.
Let's look at the other 60%. Roughly it's 30% passive and 30% active.
Okay.
So actually what we're saying to corporates is retail now represent a bigger net buyer of shares than active institutional capital. And actually you're pointing 90% plus of your attention speaking to institutions and less than 10% speaking to retail. That has to change and is changing.
Okay, so wrong audience, frankly, if you're a corporate.
Correct.
Yeah.
And actually, we live in an attention-driven economy, right? And what we've seen over the last 5 to 10 years is the Mag 7 dominating attention, headlines, and therefore capital flows.
Yeah.
Now, we've got SpaceX IPO coming up. We've got Anthropic's IPO coming up. We've got OpenAI's IPO coming up.
Yeah.
Can you imagine this problem's only going to become more exacerbated as three of the biggest companies in the world, frankly, will start to suck all the oxygen out of capital markets and especially away from companies that aren't doing anything to really address this problem.
Completely understand. And, Finimize is on a similar mission, helping investors making more informed decisions. Not to go too far down the rabbit hole here, but I wonder if you've got an opinion on the way research is done for retail investors, because you've talked about SpaceX, OpenAI, Anthropic. Go back 15 years, it was the Facebook IPO back when it was still called Facebook. And that, fast forward a little bit, it was the post office IPO in the UK. Then and now, despite retail being such a bigger part of the mix, research hasn't, in my view, adapted in the mainstream, whether it's sponsored research, whether it's institutional from the banks. It's still PDF jargon. Right. I wouldn't call it nonsense. It's high value stuff, but it's inaccessible. Therefore, it's not going to be read. Therefore, it's not going to help anyone.
Look, traditional research hasn't changed the way it's been presented in over 40 years.
Yeah.
Right. But the way we as consumers consume content has changed beyond recognition.
Exactly.
We our sports, our TV, our movies, our books, our games, our games has been aggregated and streamed, but why not our financial services content?
There you go.
Right?
Yeah.
And so really I think that there's a mismatch between how we are currently presenting financial services information and actually how we as consumers consume information. There is a huge unlock there for companies that are at the cutting edge of doing this.
Okay.
And I would add, by the way, that this industry has had a habit of implementing intellectual superiority to keep others out and justify charging higher fees, right? Which is why you've seen jargon-heavy prospectuses, sell-side research being stuck largely in an institutional circulation. And actually, the frameworks and the doors are opening for retail. Yeah. What I love to see was the FCA last year put out its 5-step plan, which actually had retail at the top of its agenda and drastically reducing red tape around the investment advice and the level of disclosures that you have to give. Yeah. And so these are catalysts that are, again, a massive unlock for those that choose to,
take advantage.
Correct.
I think with a cynical hat on, action matters more than words, and so until we see it in practice, hard to get too excited about it. But it's an important signal, I would say, to companies, to investor relations teams, to the asset managers that we speak to, that you're running out of excuses to not do this, because it's easy to fall back and say, oh, we can't do this, we're not allowed to do this, or we have to say it that way.
Right. And look, I think too much blame gets put on corporates, investor relations teams and players in the industry for not having spoken to retail or put too much time and attention on retail to this point. But you can understand it, right? They've traditionally had complex regulation and opaque guidance on how to speak to retail. Yeah. And frankly, it's been really, really difficult to measure the effectiveness and return on investment of spending time addressing retail, because it's very easy to walk into Fidelity's offices, pitch your stock and find out the next day if they bought $5 million worth of your shares.
Yes.
It's not that easy to understand that if you do a capital markets day for retail, what the impact of that is. So I do understand that it's traditionally been very difficult and complex for investor relations officers and companies to address retail. But that has changed, and we live in a digital world now where actually all those things are very addressable at a very reasonable price point.
Yeah, and I think a couple of things, what indicates how far there is still to go in this space is that the technology's jumped ahead of the institutions. And if I think historically, the last big innovation I remember in sort of investment research on the institutional side was HTML5, right? And so it's normally that the technology, the firms try to do something, they maybe build the technology or find a way to create things. At Goldman, there was something called SecDB, right? It's a securities database, every single asset, every analyst forecasts. It's a massive asset that the company built because the technology didn't exist. That's sort of the way that you might have assumed innovation happens in financial services. But we're in a place now where the technology has run far away and ahead of where the institutions are. There are ways to quite literally track, almost in the same way that, on a Bloomberg terminal, IOIA lets you see flows in a single share. You can do that down to the broker for individual investors. Right. And then I also think that model that you talked about just has to change. And, we're changing it, Curation's changing it, in that I quite like to say, and regular listeners will remember this, financial services investment research takes medium level complicated stuff, simplifies it so that the analysts can understand it, and then makes it really hard, makes it complicated so that you can sell your research and make a margin. Right? We find joy in just doing the first bit, right? There's no need to dress it up and make a margin.
Look, fundamentally, I think people get paid to look clever and make themselves look clever, right?
Yeah.
But we started, Nick and I started the business as an investment club, pitching to Nick's ex-roller deck of fund managers and asset managers. Yeah. And the one thing I learned from building this community for 5 years is it doesn't matter how sophisticated you are, it doesn't matter how wealthy you are, you all appreciate being spoken to in a simple way that grabs your attention. That was the genesis for our business, and I think that applies to anyone. And really it's fundamental content laws, right? Tell me why I care up front, then give me the information I need to go off and do my own research. And this is the other thing. Everyone has their own research processes, right? We're trying to overlay an institutional approach onto the everyday investor, but there's not one shoe fits all, one size fits all for retail investors. Everyone has their own different approach to research. But like I said at the beginning, attention is the first step of this journey. How do I capture someone's attention? Why do you, Mr. Corporate, deserve to have my attention in the first place? Then give me the information that I need, and then let me go off and do my own homework. And I think the problem actually that we're both solving starts at the very beginning of that journey.
So you talked a little bit there about the club and Nick's Rolodex. Maybe let's just take a step back. How did you guys meet? How did that club start? And what does Curation look like now?
My previous job was helping a UK fintech unicorn actually list on the New York Stock Exchange. And that really got my passion into markets. Nick and I met, and this was early 2021 when the COVID bull market was going bonkers. Nick's Rolodex of his career were interested in coming together and talking about stocks and shares. And so really I spent 3 years with Nick, one, building this community, but a community of very successful, very sophisticated ex and current professional investors. That community now represents north of $250 billion in assets collectively.
Got you.
And so what we get is a very good breadth of expertise across global equities. Now, the most interesting thing that I learned in this process was actually it doesn't matter who you are. You could be super sophisticated, or you could be a high net worth that sold his vineyard and starting to dabble in the stock market. But everyone deserves to be spoken to with the same level of attention and care, and also with the same level of simplicity, because you've got to grasp my attention. So actually, when we were pitching stocks to this community, my job was to make videos. We made cartoon videos. I made videos on YouTube to portray these equity stories. And actually what happened was, one, the companies that we were talking about loved this content so much, they said, can you help us make this for ourselves? And two, our community said to us, Nirav, we'd love it if these companies could have a strategy to get their story out to the rest of the market, because the last time I checked, a stock price only went up if someone else bought it after you.
Get that marginal buyer.
Marginal buyers. And so really this is where the genesis of, actually, can I get this amazing information out to my generation who have been asking me for stock tips like Kamiko since early 2021, and can we do it in a way that's going to capture their attention, and can we actually get the companies to foot the bill so that retail doesn't have to pay to have access to high quality information to make better informed investment decisions. And that was really the genesis of Curation's new venture.
Can we spend a bit of time on community? You've built this really exciting community, 250 billion under management. You know, Finimize has spent a bit of time building our own community, and we've got 1 million people all around the world. In an earlier podcast, I spent a bunch of time staring down the barrel of the camera, explaining, here's what everyone gets wrong, here's how you build a community. I'd love your perspective on that.
I think my biggest single takeaway from building a community, the thing that really turbocharged it, was the idea that there's no single guru, right? Lots of people in the industry like to say, I'm the smartest person in the room, especially sort of hedge fund managers whose businesses are dependent on the fact that they can outperform the markets. But really what we learned was, if you take the approach that the collective wisdom of the crowd is really powerful, and actually, you know, with our community, that crowd has a lot of experience and quite a high level of sophistication, that your collective wisdom and your alpha that you can generate is really powerful. And that was the biggest unlock, is no one saying, this is me, I'm the best at this. It's really, can you unlock the power of the crowd? And that's what's led to a very, very powerful community feel.
Got you. How do you think about trust and building trust in the community, you know, within itself, but also with Curation? Does it come down to that no gurus thing, or is there some other secret sauce?
Well, what I think is really important in our industry is actually putting your hands up and owning things when things go wrong. We all want to take credit when you put a really good idea in the room, and you make a lot of money.
Yeah.
But actually transparency is crucial, and being able to either stand by your good ideas when it's not going the way you want or expected it to, and actually owning it when you think your thesis has changed for a material reason. And again, that's been the biggest source of trust building.
Fantastic. I think that's a massive lesson for anyone in the industry watching this. My recent big bugbear, and just to get on a soapbox for a minute, is, so you might know this, we survey our members quarterly, and last quarter, the area that most people said, I want to invest here, but I don't feel confident enough, was stocks. Just garden variety stocks, right? Which in the US, 40% owned by retail investors. And that's not because stocks all of a sudden got more complicated. It's because there's been a massive dereliction of duty by platforms, by providers, by issuers. They haven't been fixing the roof while the sun is shining. They've just been resting on their laurels. And then when you have a disruption like the Iran conflict, and there's massive sell-offs and massive rallies sort of day in, day out, people don't know what to do, and they sit on their hands. And that's not an investor problem. That's an industry problem.
Right. On this point, the Iran conflict, there's some data from Winterflood, who produced a fantastic retail research report.
Okay.
And one of the most interesting bits of data I found in this report was, if you look at White House correspondence during the Iran conflict, you can track retail inflows and outflows swinging massively within a 15-minute interval of tweets from the White House.
That's interesting.
Now, what does that show you? I think that shows you that, one, retail are more sophisticated than ever before.
Yeah.
Two, we have access to information and data to make our decisions where appropriate. And three, we're looking for those insights.
Yeah.
Now, I would urge all companies to look at this as an advantage and not a paranoia.
Yeah.
Why? Because actually, if you can get your messaging right, and if you can put it on the right channels, you can unlock the fact that everyday investors and modern investors are there to listen and respond.
Yeah.
And treated with clear communications, you can harness that potential.
Yeah. Fantastic. The other big question on community for me is doing things that don't scale, that are painful.
Right.
Because in the conversations we have, everyone appreciates the value of the community that we've built, no doubt that Curation's built, but they all want it like that, right? They don't want to do the hard yards. They don't want to do the thing that doesn't scale. I guess, how have you approached that? How hard was it when you're building a business to do something that you know doesn't scale in order to get to the point that you can? And maybe it's the videos, I don't know.
Yeah. Well, look, it's taken us 5 years to get to this point.
Yeah.
Scaling is important commercially, but actually for building a community, intimacy is what's important, right?
Absolutely.
And we speak to every single one of our members on a very regular basis. We give them a channel to speak to each other, and we take on their feedback and build tools and products that they ask for. Now, this actually comes to a point in the industry that really frustrates me, right? Especially in the retail space, which is traditionally what's happened is that when players come into the retail investor industry, traditionally they've come straight out of an investment banking role and decades worth of investment banking experience. And we say, oh, I know how to tell equity stories. I'm going to transpose my experience straight onto the retail investor. Yeah. No one in this industry, apart from Finimize, by the way, who also have been doing this for 10 years, have actually gone, what does the everyday investor need?
Yeah.
What are they asking for first? And can we build a product from the ground up that's built off what they're asking for that actually serves their needs first? Yeah. And if you do that, you build communities, you build trust with retail investors, and you actually help create a deeper level of engagement. The end results are far better for every other player in the industry. I think that's why, in my view, most of the existing retail products and retail offerings that exist in the marketplace today have failed and failed to deliver attribution, which is the one thing that companies are asking and looking for. Yeah. Because actually the way they've been built has been built from the wrong way. Build it from the ground up. We spent the hard yards doing that. Yeah, my team and I have spent 2,000 hours of interviews with retail investors going, what do you need? What's wrong? And how could you be better served to get access to this information? Yeah. And I think, that's
Yeah, I completely agree. And just to share in your frustration, it's like, we've done the work to understand that this is something that can be solved and we have a view on how to solve it. I find it incredibly frustrating when I'm in a room or on a panel and the other panelists are saying, we've built these products for retail, but they are to this or they are to that. And I'm like, they are not the problem. You are, right? You're coming at this all wrong. You've been doing it. You've been, pushing up against a shut door for decades now. And you're complaining that the door's still shut? Yeah. Try pulling. It's a pull door. It's not a push.
Right.
Anyway.
I don't know if you want this on camera, but one of the biggest frustrations for me was seeing, one win was seeing that we put together a retail investment task force that was actually in Whitehall earlier this year. The biggest frustration for me was every single person around that table was the C-suite of some of the biggest asset managers and institutional players in the market. It's like, hello, can we speak and involve some of those players that actually get it and speak to retail on a regular basis and are retail investors on a regular basis? Having that input from the ground up is surely going to be super valuable, but it doesn't quite, and genuinely, it doesn't quite seem to be. I don't know if you want this on camera, like this whole scene on camera, but that whole thing just seemed wrong to me.
Yeah, I completely agree. I can see that. Yeah, in a world where track record is so important,
right?
It seems it doesn't make sense that people with the track record are not being invited in to shape the policy, shape the direction of travel.
Right.
Just to zoom out from our respective communities to the wider retail investor community, because they get called dumb money, thankfully less than they did before.
Right.
But there's tons of evidence that they're actually smart money.
Right.
And I just wonder if you can share a bit about what you've seen and what you've learned.
Yeah, I mean, one great example is the CEO of eToro recently said that retail investors might be the smartest investors in the market. We've touched on the winter flood data that shows that retail can respond within minutes of material news flow. Now, a great example that I think we should just talk about is retail get cast in a bad light because of the meme stock mania. Now, I actually think that the meme stock mania shows a more sophisticated side to retail investors than anyone's actually considered, right? Because let's look at it. The whole hypothesis around short squeezing was retail investors said, hey, there's the smart money, there's the institutions that are shorting our favorite companies, our favorite brands, and brands that we want to be around for a very long time. What can we do about this? And they actually took the super sophisticated approach of coming together as a community to short squeeze those institutions. Now, if that doesn't show quite a high degree of intricate market understanding and sophistication, I don't know what does. And secondly, it shows to me that actually they figured out a way of using tools and technology and forums, etc., to come together as a community, as one, to achieve an end goal. In which case, a lot of these were, let's short squeeze the hedge funds and help support the companies that we love. Now, this is the thing. A lot of companies ask me, well, I'm worried about the volatility that retail can create in my stock, and are they going to pump and dump, and are they meme stock crazy? Now, I actually think this shows an unlock. We know that retail have bought every single dip in the last 5 years, and actually
they've been right to do so.
They've been right to do so, and the returns have actually outperformed a lot of the institutional guys that just conform to the mean. Right? Imagine if you're a corporate. You can harness the fact that in today's digital age, you can actually build your own communities, and imagine the potential of building your own long-term resilient investor base that actually wants to champion your long-term efforts. The biggest thing about retail investors and having a retail strategy, Carl, is actually one, not just the fact that it's a corporate governance issue, right, which we're aware of, and it is your fiduciary responsibility to make sure that you speak to all your investors and potential investors at the same time with the same level of information, but more importantly, this can lower your cost of capital. Right? And there's many case studies that prove that retail can help improve liquidity, especially in UK capital markets that desperately requires that.
Yeah.
And secondly, the impact that can have on your enterprise value and valuation.
I think that fundamental value point is a real one. We saw it if you look at GameStop, AMC. Whether or not you buy into the sophistication of retail buying those stocks, it did happen, and those companies were able to transfer or transmit a pop in their share price into an opportunity to issue shares, raise capital that then transform the fundamentals of the business. So there's a real world impact there.
Can we talk about a recent UK example, which is fantastic?
Go on.
Seraphim. Seraphim Space, and we're fortunate and very privileged that they're a client of ours. Okay. But look at the amazing results that they had in raising money from UK capital markets, but in particularly the bulk of their money was raised from retail investors. And yes, they capitalized on the fact that space is a very hot topic, but they've actually been very vocal and very strong in speaking and communicating to retail. And the raise that they did with Retail Book was actually a brilliant example of how to take advantage of building a very loyal retail investor base. So it is possible, and it's possible in the UK, not just the US.
Fantastic. I guess the other benefit there as well is, detractors will talk about the risk of retail volatility. The other side of that coin is activist investors, right? And actually a strong, diversified retail base who are engaged and therefore will vote their shares is actually a pretty good defense against activists who themselves cause volatility, who themselves cause all manner of issues.
And look at what Saba's doing in the investment trust space.
Well, I didn't want to mention it, but now we're there. We're there.
Yeah. we are there. Yeah. And by the way, an investment trust. So, okay, where do we start with investment trusts? Investment trusts are a perfect vehicle for retail, right? They give retail access to companies that they otherwise potentially wouldn't have access to in a diversified way. And by the way, you can buy them for 70 cents on the dollar.
Yes.
Have you ever wanted to turn down buying a dollar for 70 cents?
Not in this environment.
Right. Yeah. So they are a perfect vehicle. Now, the issue has been that retail investors haven't had the ability to participate in voting, and activist investors like Saba have taken advantage of that. And what we're seeing really sadly is that investment trusts are now under massive attack. And I hope and I think that actually the AIC and the rest of the investment trusts are actively looking at ways to do demand generation rather than just buying back shares,
and which support the wider space.
And it'd be great to see some more regulatory or government level support for what is, I think, a brilliant product for retail investors. I'd just like to add, sorry, because I read it this morning.
Go on.
25 to 34-year-olds in the UK are twice as likely to buy an investment trust in the next 6 months compared to all other investors. So what you're seeing is a product that typically has been seen as boring and stuffy and something your grandparents might own is actually hitting the radar of younger, savvy investors. Why not start to take advantage and harness that potential? Literally the time is right now.
Let's get into how Curation does what it does. You started with videos. Companies said, make this for us. Investors said, we want more, and we want the companies to be proactive in getting this stuff to us. What does that process look like today when you walk into a room with a company? How does that process work?
Curation's role is really to bridge a gap between companies and retail investors. We give corporates the AI infrastructure to help them communicate with retail at scale. Now, what does that mean in practice? I want to help companies attract new investors, engage new investors, measure whether that's actually working, which no one else has tangibly done in the industry, and lastly, retain retail investors over the long term. So our job currently starts with, can we help you present your equity story in a jargon-free, digestible way that's transparent around the bull case and the bear case, because transparency lends integrity to your story. Can we turn your public disclosures into content that actually retail wants to engage with? That's really important. and doing that in a seamless way that takes no lift on the company? And then can we take all of that content and actually get it out in front of retail investors at scale? And once we've built your audience, can we then nurture them over the long term with the messaging and communication that you want to deliver? And we try and do this in a way that takes no lift off the investor relations teams and is at a price point that is at an affordable price point.
Got you. And then what you talked about is that measurement bit, and that being really hard for anyone to do historically.
Yeah.
Maybe talk about the challenge historically and how you've started to solve that.
So historically, the problem is, well, if I invite 100 retail investors into an AGM, how do I measure whether that actually has any tangible return on investment or return on ad spend? But we now live in a digital world.
Yeah.
And actually what Curation's managed to unlock for corporates is how can you track layers of engagement and actually audience size and track whether that translates into improved trading volume, improved liquidity, and ultimately does that translate to improved share price performance?
Right.
And we found that when companies work with us, but actually overlay this with have an effective retail strategy over the 3 to 6 months to long-term period, you can tangibly deliver uplifts in trading volume and specifically attract net new marginal buyers.
Okay. Who does this well?
Well, look, I think there are varying degrees of retail success.
Okay.
Now, a really good example is companies get scared of what can I do and what can't I do.
Right.
But a really tangible example is L'Oreal put a full-page spread every quarter in the Wall Street Journal, in Barron's, and in Financial Times.
Okay.
And they do that on their quarterly results.
Yeah.
Now, this is an example of advertising your equity story. And by the way, publicly listed companies are the only businesses that advertise once a quarter. You wouldn't advertise, if you were Cadbury's, you wouldn't advertise your products once a quarter, would you? But we do that with our equity story.
Yeah.
And actually, I think the important thing to do to actually unlock the power of retail, who are consumers, at the end of the day, they're just consuming your equity story, not just your product, is have that regular, constant dialogue and communication that builds trust and transparency and nurtures that audience.
Do you know who does that really well, but private company for now at least? Anthropic.
Right.
Every sprint, I guess because they've got 1 million Claude agents running and unlimited spend, every week, every sprint, there is a new product release, a new feature, a new video, and they're telling the story of this is how Claude can help you. This is what Claude can do now. This is the new tool, Claude for wealth, Claude for finance, Claude for lawyers, Claude for washing my kids, whatever it is. And that as a user of Claude as we are, that just every week I'm like, these guys are on it. I am bought into the way in which they build their product. Anytime a Claude person is on a podcast being interviewed, I go out of my way to go and download it and watch it and listen to it.
Right.
And so when the IPO comes along, I have no clue how the numbers are going to look, frankly. I don't think anyone does. But I'm going to be a hell of a lot more interested than I would be in another AI company.
Can we name and shame?
Go on.
I'd like to give you an example of someone that doesn't do it very well.
Are you going to say OpenAI? No? Okay,
No.
go on.
I mean, go back to public companies here. Name and shame a public company.
Yeah.
They actually do a brilliant job, but it's an example of a strategy that I don't think is particularly well thought through. So Qualcomm sponsor Manchester United.
Yes.
And Manchester United is one of the most followed football clubs in the world.
Yeah.
Right? But they spend tens, if not hundreds of millions on that sponsorship.
Yeah.
But on Manchester United's football shirt, it says
Snapdragon.
Snapdragon.
Yes.
Who knows what Snapdragon is? Remarkably,
in their defense, I made my last PC choice based on it having a Snapdragon processor.
Right.
Not because of Man United, just because of the product. And whether it was a Qualcomm product or not was by the by.
Right.
People, I'm an edge case.
You're an edge case, and you just undermine my point. But this goes back to. I could talk about this in a second. I think fundamentally what it shows, right, is imagine if that said Snapdragon by Qualcomm.
Yeah, like I bought the computer. I didn't buy Qualcomm shares.
Right.
If it said Qualcomm on it, I might have bought the stock.
Right. And so what I think actually we're finding in the retail investor space, Carl, is investor relations budgets, which have traditionally been held quite constrained by, the CFOs and the finance teams, quite rightly, are now starting to be intertwined with companies' marketing budgets, which makes a lot of sense. And I'd come back to a company that we admire a lot in this space, a company called Stock Perks.
Okay.
Now, I think everyone should be doing this, which is loyalty for your shareholders.
Okay.
Right? Example, if I own shares in BA, why don't you offer me a speedy boarding access when I go to board my planes? Reward me over the long term for being shareholders. This is something that Stock Perks does brilliantly. And I think it's an amazing way to loop in the marketing world, the loyalty world, and actually build long-term sustainable shareholder bases.
I love that idea.
It's this idea that actually your customers can be your shareholders and your shareholders can be your customers. And that's a virtuous circle that can be unlocked. And actually, as a shareholder, I'd love it if Apple invited me to a special event once. Most of the stocks I own are consumer names because I know what those companies do and I know the brands. And that takes you on to the whole, again, why should I be speaking to retail and informing them on what I do, build that relationship, and they will be long-term shareholders.
I want to ask you one thing before I let you go, which is, what's the most ridiculous or funny financial news story you've seen in the last few weeks?
Yeah, okay, there's two stories.
Perfect.
There's two stories that I've got to flag to you. So the first one is, in Q1 this year, Coinbase's CEO was releasing their quarterly earnings. Whilst he did so, he played Subway Surfers throughout the earnings release. Now,
how do you know that?
It was, I think it was released to their employees, and it was then obviously leaked. And this captured my interest because, one, this was actually a TikTok trend at the time, which is, spiel out some information on a face to camera, and whilst you're doing that, play almost like brain rot sort of video to capture people's attention. What I think this demonstrates is there's a fine line between entertainment and actually educating responsibly. However, there are ways to start to think about being unique and novel and capturing attention of a very different audience, right? So I thought that was super cool.
That's fine.
The second thing that hit my attention last week, and this, I think is an amazing way to sort of round off what we've spoken about, is perhaps the most important company in the world today, SpaceX, about to IPO, and recently just put out a job advertisement for an investor relations team member. I looked at that job description, and in that job description, one of the most important skill sets it requested was social media expertise.
That's interesting. That's interesting for two reasons. One, it makes the point that we've been talking about all day, just around engaging investors, retail investors. However, the other point it makes is that isn't XAI already the social media expert because it's plugged into Twitter? Right. And do you need that person?
100%. But what I think, and I don't know if you want this in the podcast, but also just put out a job description for a new investor relations officer, and it didn't have requirement for social media expertise.
Well, I, for one, am shocked.
But what I think this shows you is, like, there's a clear example of what good looks like, and the benefits that are attributed to the companies that actually have and implement a retail strategy. And actually, what I'd like to end on is, this is the biggest dislocation I've ever seen in financial markets, and the opportunity is so clearly there for the companies and players in the market that choose to embrace and unlock the power of retail.
That's a perfect ending. Nirav Karia, thank you so much for joining me.
Thanks, buddy.